Hello everyone and welcome to Macro Cafe episode 6 with your guest the Cowboy here. And let's take a look at these markets. In our Macro Cafe we usually cover oil, gold, S&P 500, the dollar index, a little bit of Bitcoin, the 10-year rates, and then we take a look also at some of the rotations into the sectors of the S&P 500 and a little bit of the asset classes as well. So let's begin by taking a look at Bitcoin here. And after we found some sort of a temporary top above about 58,340, we're pulling back on Bitcoin. And if you kind of go back a couple of weeks ago, I've talked about this, this fifth wave being in progress, and we were looking to see how far this will travel before we embark in this fourth wave. So sure enough, back then we were at about 58, so we were at about 48. So it wasn't long after that, maybe another $10,000 before we kind of found the top and pull back here in this fourth wave. So, comes to show you that, the Elliott wave structures continue to make sense in here, and you kind of have to look at the legs and the impulses, the corrections, do a little bit of a fib measurements and try to identify, how far some moves can travel and, where are you in the overall sequence. And, I was looking for slightly higher there to at about, 62 to 63,000. We just fell short of that target, but I think now we're back in this fourth wave formation. What does this mean for the overall? Well, it means that I think we're going to have to spend a little bit of time in this fourth wave. I don't think, if indeed I am correct in saying that that's this fourth wave, I doubted that this is all we're going to get. At the minimum, we would have to mimic, a little bit of a distance travel in this second wave. Because remember, Elliott wave structures here, they kind of tend to have a very nice relationships between waves of similar degrees. And, since we're looking at this fourth wave primary in here to develop in terms of time travel, you're looking at about, maybe, I would say middle of March to the end of March here until, this fourth wave could be finished. So there's still a little bit of time, I think, to go, in this structure. I think, whatever it's going to end up being, a triangle, or, if it's going to be some sort of a complex correction, it's going to need a little bit of time to move sideways on here. Now, I could be wrong, and the market could continue to push higher in here. This could be a wave 1, this could be a wave 2, and we can kind of continue to maybe, even move up higher, and this third wave continues to push. So overall, take a look at the last week video where I talk about Bitcoin and Ethereum analysis a little bit more in detail, but you'll be able to kind of see where I'm standing. And then I think I have a little bit of a shorter term outlook in there as well. And if you want to know a little bit more about this, come and visit us into the Telegram room where I do daily videos on Bitcoin, and we go into the 2-hour charts, 3-hour charts, intraday. We look at the moves in there. We take trades based on that. But this is just to kind of give you an idea of where we are in the overall sequence. So this is where we are in Bitcoin. I think it's continues to be a pretty strong asset class here that continues to outperform markets overall. You'll see it towards the end of this video, where we are in that kind of process in terms of performance. So I continue to remain bullish even after this correction. I think this thing is probably going to push up here towards $100,000 before this larger cycle third wave is over, right on there. All right, let's take a look at our next slide in here, and this is the oil market. So a couple of weeks ago I've talked about this regarding this B wave top, which is at about 65, 64, right? It's right before we kind of got hit with the news of the virus, and the oil market and the shutout of the economy completely destroyed the oil. And you've gone, it doesn't show on here, but you've actually on the futures market we've even gone negative. So since then we recovered nicely here, and I think without speculating a lot into what's happening from here, I think we're still in the process of trying to finish up at least this, let's say, corrective C wave coming from these lows. If not, some sort of a wave 1 that will continue to push oil much, much higher in here with the, with the news about inflation and the reopening of the economy. I'm thinking the demand of the oil will obviously increase, and this is already kind of shown here into this high prices that we have already. But I think up here near at about 65 level, this B wave top, I think we're going to encounter a little bit of a resistance, and the market is starting to slow down a little bit as we're approaching these levels. Now you notice there's still a lot to go until the end of the current year, and if we're going to get some kind of a sideways move on there, this would be the time to kind of start it. So again, I don't want to speculate too much. This thing could go a little bit higher in here if it really wants to and attack the top of this channel. But I think, we're going to enter into a period of consolidation in oil and kind of digest this whole advance. Plus, we don't know exactly, what this means for the overall economy, how much actually, growth we're going to get, and how much, demand for oil it's going to be. So maybe the market will digest and just kind of move sideways for a little while in here. And that's what that's going to do. And even if that happens for the rest of the year, let's say that you're going to spend bouncing in oil between, let's say, $65 to $50 level, this will create this kind of inverted head and shoulder where you're going to have this massive neckline in here. So if the market kind of turns back in here, then and if it does it correctively in a three-wave structure, then that the next move is going to be likely to the upside, and we're going to rip in oil, and we're going to get towards 150, who knows, maybe even $200 oil, if the dollar starts to fall apart. So very interesting developments in here. On a shorter time frame, I can take you up here to kind of a one-day chart. Looks in the terms of the Elliott wave sequence, I think we're in the final stages of this fifth wave. If not, we might be already done. But again, we're very, very close to this B wave top, as you can see, up into these levels. And a correction anywhere back here to about 50, it's fair game. If we start to drop below these levels, then you're looking back to $45 to $40 oil. But keep in mind, we're in an uptrend. We're starting it from here and we're moving up. So the opportunities for oil to get into oil trades or oil ETFs or into the energy markets, I think they're going to be abundant this year. And as the oil kind of pulls back, that's going to give you good entry levels on there. So I would watch this level to hold on the downside, this 51 level, and then follow below that. Then you look at the top of this A wave for supports. So that's kind of my view on oil in here. I'm kind of cautious up into these levels, but I remain bullish and optimistic on the overall outlook, and I'm going to look forward to opportunities to join as this market kind of corrects a little bit lower. All right, next I have the moving averages. So just to kind of finalize on oil, I mean, the trend remains clearly up. You're above the 21-day moving average. You have the 50 and the 200. So I mean, these things continue to point higher, and depending on what's your time frame and what's your outlook, you're kind of splitting yourself between these moving averages. So for the shorter term momentum, you look at about 21. Medium term, you look at the 50, and a little bit of a longer term, you go back down to about 200-day moving average. So if you see in here, the 200 days right now at about 43, the 50, it's about 54. So even if you want to correct in oil, right, this is a pretty good level that kind of coincides with what I've said before, that fourth wave low, and it would be a good place to kind of get more oil and move a little bit higher. If the market really wants to flush off, this would be a pretty good defense. I mean, right now it's coming at the pretty big demand zone that's going to be here at about 43, right? Previous resistance, now support on the way down, along with the 200-day moving average, and then a push back up higher. All right, let's take a look at gold. And gold is acting very interesting, because maybe people are asking, hey, why is this thing selling off? I mean, if it's inflation, and if with all this money printing from the Fed, and with the biggest balance sheet in the history, we're at about $6 or $7 trillion in the Federal Reserve balance sheet, and why isn't gold rallying? I mean, this should be the obvious thing to happen. Well, I think gold kind of smelled this way before, right? So we kind of started a big rally in gold back in the fall of 2018, and maybe the summer of 2018, and we've been rallying. I mean, since $1,100 in gold. I mean, we almost doubled here, and we passed 2,000. So since then we've been recovering, and here I'm thinking this is, I mean, we've been correcting since then. I'm thinking this is a third wave advance, right? So this is your wave one, that's your wave two. And, we might be in this fourth wave decline. I mean, this whole move in here looks clearly corrective. You are coming into a very nice, support from this trending channel. And the move in here, it's a nice and kind of complex directional correction. So you have this triple zigzag that happens right in W, X, Y, X, Z. These X waves are very similar here to each other, and this kind of tells me that there is a big chance that gold it's probably trying to find the bottom in here, and maybe it's going to start to move towards the upside. Now, there's no indication of that yet, right? The markets continue to sell off. You have an increase in interest rates, and I'm going to talk about here shortly. And as you know, gold is very, very sensitive, to the real yields. And as the 10-year moves higher, and you start to have those inflation expectation moving as well, gold will obviously suffer a little bit here. So I think we're at a very important kind of macro, I should say, cross in the roads, because if yield starts to pull back from here, right, they're kind of elevated, and they've gone up a little bit faster than kind of everybody expected, while gold sold off. If we find a top in those yields, if the yields are going to sell off, I think gold is going to benefit and is going to start to move back up higher in here. Now, I'm not willing to pick a low in gold, although this is a very, very important level. But, I'm going to look shorter term for some kind of a bounce out of here, maybe in an impulsive wave, and then look for a small pullback to join, and that is going to be a confirmation. If you want to be very safe, I would wait for a move up here about this X wave. So, kind of going back to a 2-day chart, right? This is the trend line that we're kind of testing right now. And, this would be the first level that I would kind of watch as the gold will move back out of here. So if we're able to kind of take this level out, and if this happens in 5 waves, look for a 3-wave setback in here to join a move up higher and for a breakout. So in terms of Elliott wave trading opportunities, and in the way you look at these markets, and that's how I trade with my members into the pro room every single day. That's what we look for, right? We're not trying to be smart here and just pick lows or pick tops, right? You're trying to use Elliott wave to your advantage, along with more technical analysis in here, and find areas where markets can turn from, and then look for those confirmations to tell you, yeah, I think we found a low in here, we're about to pull back, right? You don't have to necessarily be excited, wow, gold is selling off, let me buy it. But more of a, things are getting into an interesting zone. Let me see if it bounces, right? It's not like it's going to rocket straight up and it's going to leave you in the dust. Things happen. Normally here you're going to start to get a little bit of trust out of the gold market, and then you're going to get those pullbacks that you can start to build a position. Now, if you really wanted to get in it, let's say at this point, you can start a little bit small and then, add a little bit more on this as the market kind of turns around from here, and then can increase your positions, and now you have some stops to work with. But the next major level in gold here is about 1450, which is, I'll show you in a second, which is where I think the 200-week moving average resides. Another thing I want to draw attention to is the time elapse in this move in here. So you can see what I'm doing here is I'm doing a fib time measurement for gold into this 4th wave, compare with this wave second. I actually have a nice YouTube video about it where you can kind of see how to apply that in TradingView. This is the MotiveWave software that I have this automatically plotted in here. So you can see I have 100%. Gold is right now traveled 100% distance compared with the second wave, right? So back in July 2018, right now in February 2021, and we're at about 100% of this move. So there is a very nice confluence of interest rates being high in here with the possibility of turning. You have a trend line, you have 100% in times traveled, so things are starting to look interesting. My signals in here are starting to flash, right? So I'm starting to get interested. All right, and I've actually made a few purchases into our portfolios, into the pro room in there, into the gold miners, and even on some physical gold in there, where we can get not necessarily paper, but it's it's starting to get my attention. All right, so moving further down here, I wanted to show you, right, the only downside on this is the fact that we lost the 200-day moving average, and that's this green line. And if I'm doing another channel that kind of points lower like that, you can see in here that we're starting to kind of come near the bottom of that channel. I mean, we can even, depending on how you put this trend line, right, you could also say that you almost tagged it. So even if we're going to do a little bit more sell-off, maybe another flush into Monday or Tuesday next week, but then we could start to get a recovery in here. Now, if we're climbing back above that 200-day moving average, now that would be a good signal that this was a kind of a finished correction, and you're starting to move about those levels that I talked about. You're above 200-day moving average. The investors will start to get confidence that we're returning into a bullish trend back into gold. Again, the 200-week moving average, which I plotted it here on the daily charts, comes at about 1454, which is right near this kind of swing lows that I have on here. So if I mean, to get such a big flush in gold is unlikely, but that would be some of the levels that I would watch if this kind of sell-off continues lower. By then this thing will kind of flatten out a little bit more, and that would be my next interest into gold for an upward trend. Okay, let's continue to move in here, and since I've talked about the yields, let's take a look at the 10-year yield in here on the 1-week charts. And you guys know from previous videos as well that ever since we broken above this 1% into the 10-year yield, I was looking much higher. We talked about this resistance in here. We kind of blow through it a little bit, but now we kind of closed below. So this tells me there is a chance that this third wave that I have plotted in here could be over or near completion. So I'm on kind of a high alert for maybe a pullback here in yields into this fourth wave. Now, this wave one is kind of high, right? And as we know, this fourth wave cannot close in the territory of the wave one. So either this third wave needs to travel a little bit higher to have more room for this fourth wave, or this thing here, it's not the correct count, right? So it could be a 1, 2, and this is another 1 and another 2, and then you rip to the upside, right? So I stay open-minded on here. I'm kind of, watching these levels. I think we're a little bit extended, but I remain in the camp that says I don't think there's going to be a return here to negative yields or even back to retesting, let's say, 50 to 55 basis points into the yields. I think the trend kind of shifted. The market sentiment here shifted towards more of an inflationary outlook with the reopening of the economy, and this is obviously reflected into the yields in here. Now, you can argue that the Fed can step in, they can do yield control, and they can, try to cap this from rising too fast because it hurts the stock market, which you could kind of start to see, right? So a pretty fast rise into the yields actually hurts the technology sector because those guys look at the forward earnings and all that stuff. But more of a gradual rise into the yields, it's more beneficial to the stock market than something that's very, very sharp. So let's maybe step back a little bit in here, and see if these things are going to start to correct lower. If they're going to continue to rise very, very fast, then the stock markets will sell off. Now the banks and the financial sectors will continue to benefit on here, and that's why I'm kind of positioned there along with oil and the energy markets. And speaking of that, let's just kind of talk about the yield curve as well. And this is a chart, looking back to, and you don't have the dates on here, but I can tell you, this is we're back in the 89, where this is a 98 and 2000 recessions, and then you are here in the 2008, right? And then this is, the crisis from last year. So, right now we have a rising yield curve in here. You can see what happens. You're going to have, I think, a growing economy here, for at least the next few years. So people that talk about crashes and things like that, I don't think this is what the bond market is telling you. We're clearly flushed this out and we're kind of done. And now we're coming back into a period of recovery that could take who knows how many years, right? So looking down the road, this can continue for another, 5, 6, 7 years. So, there's always a risk, right, in the markets that, you're going to get some kind of a credit risk, and you're at the top in the equities, and who knows. But for right now, the bond market is not telling you that, right? You have a rising yield curve, and that should be supportive of the overall outlook in the economy. So I continue to kind of watch. This is interesting, and if you want to have a little bit of sentiment in what's going on, this is one chart that you should kind of keep it always in the back of your mind and just kind of look at it. I mean, the markets were sending you signals in here, right, since 2017, 2018, 2019, that we're going into a possibility of getting on an inverted yield curve, right, and the market was sending you a signal that you're going to have a crash. I mean, the catalyst obviously was COVID, but it could have been anything else, and I think it still would have happened in there. So, we've gotten the flush out, and now we're kind of recovering. All right, let's continue to go and take a look here at the S&P 500. I talked about it a couple of weeks ago, so if you go back and see my slides from back then, I talked about these 100% fib zones, and we had a cluster of fibs in here of about 100% and also a 38.2 multiple of this fifth wave, and we're hitting a little bit of a resistance. So this is about 100% compared with this wave one that I have on here. So we're watching this kind of cycle fifth wave, and we're getting a little bit of a pullback. Is this the top? Very hard to say, right? You're just, barely scratching the surface in here. You have a very small sell-off. I mean, this is a 10-year chart, 11-year chart in here, and we're clearly in an uptrend here in equities. And with the exception of a few kind of sideways years that you have in here, maybe 2018 to 2019, most of the markets you have something in here between 2012 and 2013. You've been in pretty clean uptrends on here, right? And this was another year. I mean, starting from the recovery back in March, where you continue to be bullish. And I think this market, as being supported by the Fed and with all the monetary policy that we're getting and the fiscal, I think, it's going to be very hard for these things to kind of sell off on here. Now, again, if the yields are rising way too fast, it could be a possibility, but I continue to remain bullish on this, and until we start to break some of these levels like 36.65 or 32.34, it's hard for me to turn bearish on the stock market. We have some flashing signs in here, again, in terms of equality, but I'm not too happy with this wave in here. It doesn't seem to me that it's a completed sequence just yet. So kind of going back here to about a one-day chart, we do have a sell-off. Again, my levels to watch are this 36.65. If we're going to get below this level and then you get a three-wave setback in here, then I'm going to be more and say, hey, listen, I think we're going to sell off and try to come back near 32.34. So that's probably going to be another correction that you're going to get, right? But it's still very, very early. Again, this could be a second wave, right? And you're basically in a bull market. That's a 1, that's a 2, right? Because you can go 1, 2, 3, 4, and 5. That's a ABC in here in 2. And now you're doing another wave 1. It could be a flat in here in wave 2, and then you continue to rip to the upside. So, I'm not rushing and calling a top yet. I need to see a little bit more from this market, right? But overall, I think you have good, sorry about that. We have, just a good overall momentum here into the stocks, and, we have good rotations and good breadth into the overall market. So, I mean, the technology sector is a little bit weaker, again, because of the interest rates, but some of the other markets are kind of picking up behind. Let's take a look at the dollar index, because this is another one that's kind of playing some games on here, and because it's attacking very important levels here to the downside. And, we're watching this 90 level, 89, 88, for a massive breakout down. And this is a 2-week chart. I mean, obviously goes here to 90, 94, 90, 95. Overall, if you go even further down, you kind of remain in a structural decline into the dollar. If you're looking at this whole move as being an impulsive move in a 1, 2, 3, 4, and 5, right? This is a corrective pattern going up. You got some overlaps in here, right? It doesn't look very impulsive. So, for all intents and purposes, watching it from these highs to these lows and corrective, I would look for a larger decline into the dollar, right? I don't want to get into a big discussion about cryptocurrencies and Bitcoin and where funds are flowing. And I know dollar still remains the global reserve currency. Everybody kind of trades into the dollar. It's the main currency for oil and for the other markets, and so people need the dollars in their trade. If it is to bounce, right, this would be the perfect levels to do it from, because you have, just like in the gold market, you have a pretty good attack of this trend line, right, or of this channel, right? You're at the bottom section of it. You almost have equality between these two legs in here, right? So you can look and say, well, fine, what if this whole thing is an impulse, and that's a 1, that's a 2, and now that's another 1, and that's another 2 in here, right? ABC, and now you're actually reaping higher. This will obviously, destroy the markets overall. This will be, very hurtful for, I think, the United States economy, for the stock market, and for the markets overall around the world. We'll see if this is the moment of the turn into the US dollar. It's still very, very premature. Obviously this thing take a little bit of time to develop. I mean, you're looking at, we're in 2021, you would have to go back here to 2030, right, by the time you would reach, a massive advance here into the dollar. So, there'll be time in here to kind of shift, and you can see a little bit of a bullish move out of the dollar. If you're going about 94, 98, you're getting a pullback in here in 3 waves. You retest this level, then you're starting to embark higher. But I don't think we're done overall into the decline into the dollar, right? I'm looking at the smaller time frames. This is a daily chart. I think we're still kind of finding a little bit of a more of a decline and of a low into this larger 5th wave, and then we're going to get more of a bounce. The decline, the rise out of here remains in 3 waves, guys, and that's not bullish. Now, there was a pretty big fake out that happened on Thursday, I think, of this week, and the market sold off. So everybody was getting pretty bearish on the dollar, including myself, as we kind of broke this head and shoulder, and the market just like, screw you, I'm going back up. So that tells me there was pretty big positioning in here, short the dollar, and we're trying to shake off that. We're going to have to kind of get above these levels to say, and that's about 91.20, 91.50, to say, yeah, I think, we've reached a low and we're pushing back up higher. But I'm not very convinced. I think this still looks corrective. We could still be in a triangle, right? So, we're looking to see if this is a wave 1, that's a wave 2, that's a wave 3, maybe do a triangle here in an A, B, C, D, and E, kind of sideways like that before we flush lower again. So I'm not ready to give up on kind of my bearish outlook in here for a move lower towards 88, maybe even 87 in the dollar index. I'll continue to stay that. If the market proves me wrong, then we're going to have some resistance back up into these levels. But if we start to get above those and we're starting to get impulsive, right, you're almost building maybe a 1, flat in 2. It doesn't even look like that, because that's not a 5-wave decline. So that's why I have issues with this move. I'll continue to monitor it, and we'll see what happens into the next week. If you want to stay up to date with it, we're kind of taking a daily look at these things. Come into our Telegram room, and I'll be able to kind of keep you updated on that. Okay, let's jump over and take a look at some of our rotation graphs. So this kind of tells you, this is a monthly relative rotation where all these asset classes are kind of rotating against a benchmark. The benchmark that I have on here is this Vanguard Balanced Index Fund. I think this kind of gives you a pretty good view of what happens into the overall markets, and it just kind of holds everything into a good balanced relationship. And because you're looking at strength and weakness across markets, but you're trying to say, well, against what? Against the S&P 500, against the dollar, against Bitcoin, against gold, against what? And this Vanguard Balanced Index Fund is a pretty good measure to kind of look against. And you see in here you have oil, right? So the CL, I mean, these are the oil futures. You have gold in here. You have the dollar index. You have the government bonds, and then you have the S&P, and then this ITOT ETF. And then you have Bitcoin, and you can see. I mean, look at the massive outperformance in Bitcoin. If you were to sell everything, right, and put all your money into Bitcoin for the past, I mean, even 1, 2, 3, 4, 5, 6 months, right, when Bitcoin was, starting to gain a little bit more strength and start to gain momentum in here, right? I mean, this is I mean, this chart kind of tells you everything. Oil is kind of coming strongly from behind in here, right? For the past 5-6 months, right? It's been lagging, but since November, October in here, we're starting to pull back, and we're now in the improving quadrant in here. So that's why I wanted to stay, because this rotation, it's not going to finish, especially on this larger time frames. I don't think it's going to finish and turn back like that. I think the momentum is kind of clearly to the upside, and even if you're going to slow down a little bit, so maybe the pace of the tails will get a little bit smaller as you're kind of getting into the further months, the momentum continues. So I do want to have exposure to oil comparison with the overall market. I don't necessarily want to be in the dollar. You can see that the dollar, it's weakening, and it's basically massively underperforming the markets overall. So until this arrow starts to turn up and start to get maybe to this improving quadrant, then I'm going to be interested more into the dollar. Until then, not really. You can see gold, it's kind of pointing lower in here, and these are monthly charts, right? So when you're looking at this thing, you're talking years of development in here. So in terms of positioning, if you're not one of those types that kind of bounces in and out of them every single week, right? If you're trying to position yourself for years down the road, this map kind of tells you what's happening overall. So, not necessarily, you want to have gold in your portfolio, but you can see in here, you're going to underperform if you're going to be in it based on this. It's been leading in here, but we've turned. Now, a very good indication is, and kind of watch this for the next several months, especially if we're coming out of that correction, if this arrow starts to turn and get back into the leading, right, that's going to be a very important development, and then I'm going to be more encouraged in owning even more gold. The S&P 500 in here, it's very close to the benchmark. Same with this ITOT ETF. So they're pointing higher, which tells me, hey, you still want to be involved in stocks. They're continuing to look pretty good. I'm going to bounce down here and just kind of show you a 1 week relative rotation on a similar story against this Vanguard Bell Index fund. Bitcoin is losing a little bit of momentum, but it continued to stay in the leading quadrant. So this is a weekly outlook. You can see how the dollar index is just kind of slowly moving in there, with gold moving higher. But in terms of momentum and volatility, they continue to be very, very subdued. Bitcoin here continues to remain a very good performer, and based on this fourth wave, maybe we'll continue to move lower for a little while and then push back up higher. Even if it's going to continue to weaken, just kind of watch those daily rotations, and maybe by the time it gets back towards 60 to 70 to 100,000, that will be the time to kind of reduce exposure to Bitcoin and maybe move on some of these other asset classes. For right now, I think Bitcoin remains pretty strong out there. And then the last one I wanted to show you in here, it's a little bit of this rotations into the sectors, into the S&P 500, and you have energy, financials, and you have industrials and all this, right? So this is a 1 month rotation graph as well, and you can notice how even though energy continues to underperform the S&P 500, at least for the past let's say here 6-7 months, I think this goes back to September of 2020, it's been improving quite a lot. Right, and it's something that I'm watching, and I'm trying to stay, because this is a 1 month relative rotation. I want to have exposure to XLE. It looks like it's going to go into the improving, and it's going to go into the rotation. So this will take a year or even a couple of years of performance, and maybe even outperformance versus the S&P as we're trying to move back in there. So it's still very, very early. You're going to get some setbacks along the way, but you can see the technology sector, as continues to lead on a monthly basis, it's pointing lower, right? So people are flying out of this technology, right? And they're moving back into the energy and the financials, and the financials are here. So they're starting to point towards getting into the improving quadrant, which, even if you're a little bit early, this is where you want to kind of be in here. Industrials as well, and you can see the material sector is actually pretty good, right? It's about to enter into the leading quadrant on a monthly basis. Some of these other ones, right? So you have utilities and real estate, they're going west. Slightly move higher in here into the real estate, but nothing very convincing on the monthly charts. So continue to watch month after month, and see how you kind of position yourself on a longer time frame on these things. I mean, the consumer staples, not doing very, very well. And then the health sector, it's been coming out of the leading and just kind of slowly getting here into the underperforming. So, these are some of the sectors that are, especially on the monthly, they're going to lag a little bit in here. But I'm excited about materials. I'm excited about industrials and financials and energy. And this is all about this reopening of the economy and maybe some of this, roaring 20s that you kind of hear people talking about. So let's see what happens. We'll continue to watch it. Again, hey guys, thank you so much for subscribing and being patient with me. I know looking at the macro sectors, takes a little bit longer time. I mean, this video is about 35 minutes. So if you've been patient to kind of watch this whole thing, don't forget to hit the thumbs up button, subscribe to this channel for more information like that. Take a look at our crypto markets as well. Every 2 weeks we do Bitcoin and technical analysis. I think I'm going to start a series on alts as well. I'm kind of trying to think about the format and what I'm going to cover on there. If you want more information and daily updates, come into my Telegram channel. I have a private room. There is also a public room, where we do discussions in general. I'm not getting into much more detail, but on our private room, you can see, all the stocks that I'm buying, that I'm selling, the options, what I'm doing in the crypto markets, what I'm doing with the alts, and, where my positioning is, what I'm thinking about, and kind of, we have members in there that share charts, and we go into discussions, and we're doing pretty well in there in terms of continuing to follow the narrative and position ourselves on the right side of these markets. So thanks again for watching, and I'll see you in a couple of weeks for Macro Cafe number 7. Until then, have a nice rest of the weekend, and I'll see you soon. Bye bye.